Hi everyone, John Boardman, founder and CEO of Ballast, and I wanted to touch on a commentary that we issued earlier this week. And the title of that is, There is Good in This Market. No one likes seeing portfolio values down from previous months, but when we look through and what is actually happening in the market today, what we see is actual true historic market fundamentals being applied. That's a positive. For the first time in a long time, fundamentals are outweighing stories, and what we've seen with a number of stocks that have been up dramatically over the last few years, where really earnings power within those companies didn't justify those stock prices, they're getting punished for that. Conversely, those names with strong earnings are actually holding up pretty well in this market. Secondarily, yes, inflation is up, but generally speaking, the economy is quite strong. Unemployment is very low. Demand within the consumer base is still very strong. So when we think about the Fed's activity right now, increasing interest rates, it really is about cooling down economic activity and trying to hold that inflation down. If we look back 13 years ago when rates were driven down to the floor by the Fed, that was in reaction to the financial crisis. In that situation, the economy was really teetering on the brink of collapse. So if we put it in perspective, it's much better to be in an environment like this where there actually is low unemployment and strong economic activity. Although GDP was negative, GDP growth was negative in the first quarter, and we expect it to be negative in the second quarter. We do anticipate if we do have some type of a recession, being two negative growth quarters, that it should be quite mild in nature. And lastly, with higher interest rates, I think it's important that we all have a historic perspective to think about interest rates and what they actually mean. We've been in an environment with rates artificially low, and in so many ways it is not properly pricing risk. Depositors are not being rewarded for placing money within a depository institution, and lenders are not being paid a commensurate return for the risk in the loan that they're making. Now that we're seeing interest rates move back up, it's taking us to a place where risk is more properly priced in the environment. So from our standpoint, the most important thing you can do as an investor is decisions that you're making today, you really need to focus on the long term. When things get volatile, it's very easy to get short term in the way that we think about our decision making. More often than not, if you're thinking about your long-term financial plan, you're going to make better decisions. Decisions based in the short run tend to be emotional and often counterproductive to your long-term picture. Thank you.